Ever wonder why prices in the market move the way they do, why Bitcoin suddenly drops or pumps when it reaches certain levels? It's not magic, fellas. It's supply and demand. Big players, institutions, whales, and smart money aren't just guessing. They use this strategy to predict price movements before they happen. And guess what? You can do the same. It's not that hard. So stick around because this strategy could change the way you see the market forever. Now, before I show you real charts, real examples with some extra tools that I'm using, let's first break it down the full concept of supply and demand in trading, which is super simple actually, by analyzing an illustration I prepare for you. So step by step, on the left side, we have an example of the supply. On the right side, we have a perfect example of the demand. And the concept is pretty simple actually. So the supply is a price level where sellers steps in and push the price down. And we need to be able to identify those levels. Demand zone, on the other hand, price level where buyers steps in and push the price up. Pretty simple, huh? But first, how to identify that these are definitely our supply zone and how to react. For example, I'm going to start talking about the supply and from the left side to the right side. On the right side, we have a demand. So on the left side, supply zone. So let's just imagine that the price in the market from the top moves, or even from the bottom, moves inside somewhere in between and starts consolidating and suddenly it starts dropping dramatically. Printed this bearish big red bearish candle. What does that tells us? That this is the level where sellers agrees and it's acceptable to them to sell that specific asset at that price. It is okay to them and they're gonna start selling right away when it comes to those levels. For example, there's like a two type of different supply and demand levels. So if the price comes from the top and starts consolidating and starts dropping, so that is like continuation of the downtrend. And if the price comes from the, let's just say from the bottom, and starts consolidating and drops, so that would mean that we reach our top and we changing the whole character. We're breaking the whole structure and shifting from the bullish into the bearish. So the continuation, if the price comes from the top, starts consolidating once again, instant drop, that what indicates us a potential supply zone. So we traders, what we do in this situation, we are waiting for a retest. Of course, a lot of traders are trading more aggressively because they're more experienced and with the naked eye, they can see that this is going to be definitely our supply zone, but we don't know that. We need to double check if this is like a truly our supply zone and we can start opening our short sell position. So what we are waiting that the price, this zone right now works like a magnet, and the price after a dump reverse climbs towards the upside, retest that juicy supply level, and we are opening a short sell position. And if we're getting an extra confirmation after getting retested from here with another candle, we'll see another drop. We're getting that confirmation that we're gonna get rejected from here again. This is definitely our juicy supply level, and we're start opening our short sell position. And this is the window, just for example, this is our window where we step in, where we traders with leverage, we're opening our short sell position and we're making money during this drop. All right, so let me just quickly delete that. Once again, this drawdown, this instant shock to the downside has to be followed with this bearish big red candle. And I'm going to show you in the real charts, so just bear with me. Please watch this video till the end. Of course, on the other hand, demand, it is the difference between supply and demand. So this is the level where the buyers are reaccumulating or accepting that this is the price, acceptable to them to buy even more of the specific asset, or they're gonna reaccumulate their position. So a price level where buyer steps in and push the price up. From the top or even from the bottom, we're start consolidating. Most of the time from the bottom, we're keeping this bullish momentum, this, let's just say, uptrend going. And yeah, we are printing this impulsive movement to the upside, following by this big bullish candle, the price climbing towards the upside. And right now, it's suddenly this is gonna work like a magnet once again. Buyers still accept that the price is acceptable to them to reaccumulate or to start buying once again this specific asset. And after retest the zone, confirmation, opening our buy long positions, this is where we step in and we're using this situation to open our buy long positions with the leverage. This is where we step in, and this is our window where we can make money. So in general, let me just quickly leave one more time. So by talking about supply, we form this beautiful supply box. And yes, sellers are in control. The bulls are trying to push price towards the upside, but the selling pressure is too high and the bulls are running out of steam and we're getting rejected once again. On the other hand, demand, consolidation, impulsive movement to the upside. I'm calling those impulsive movements like a nipple pump. I'm always like chasing for those nipple pumps. And I don't know, you can name it however you want, but those impulsive movements to the upside or like a drawdowns, impulsive drawdowns. So whatever, you can name them however you want at this point. But yeah, after seeing this impulsive movement to the upside, yes, buyers are in control. Sellers are trying to push price to the downside, but the buying pressure is too high at this level. And we're getting a retest, a retracement, opening our buy long positions and using this window as an opportunity to make money in the market. Of course, the question is, how long those supply and demand zones could last. So as an example, if you're a scalp trader and you're using 1 minute time frame or a 3 minute time frame or even 4 minute time frame, so those supply zones could be valid for at least 1 day. If you are trading on the 5, 10, 15 minute time frames, 3-4 days, your demand and supply zones could be valid for 3 up to 4 days. If you're a trader like me who likes to trade on the bigger time frames like 1 hour, 2 hour, 4 hour time frames like a swing trader, 20-30 days, this is our window where those supply zones and demand zones could be valid. Again, if you're trading crypto like me on the daily time frame, I'm a swing trader with crypto. Daily time frames are one of those time frames where all of the juices are, because we have more information on those time frames, as you already know. So the daily time frame, all of those demand and supply zones could last and could be valid for 1 to 2 months. So that's pretty much it. So that approximately, I'm not accurate, but yeah, I'm not that like crazy accurate, but most of the time, if you're trading on the lower time frame, because those demand and supply zones could change, sellers and buyers could start agreeing that they could start buying or selling at the different price levels. So the charts also are telling us that, yeah, we're forming some supply zone at a different level and we're forming a demand zone at the different levels. So that is pretty much it about the whole concept. The concept is super simple, guys. It is super simple. After some kind of consolidation, once again, impulsive movement to the upside, demand zone. After consolidation, dramatic drawdown, impulsive movement to the downside, supply zone. And we are like, to be more safe, we traders waiting for that retracement for us to start opening a short sell position or a retracement to the downside, the pullback to the downside, start opening our buy long position. The question is, why supply and demand trading strategy? For me, I don't want to say is the best because I'm using more tools than the supply and demand, but this is like a first step I'm taking and trying to analyze where are the juicy supply and demand zones are when I'm stepping into the market. So I'm always trying what I'm doing first. Fibonacci's, trend lines, etc. comes second. So this is the first that I'm doing. I'm trying to identify supply and demand zones, because let's just imagine that we are forming this beautiful downtrend when we could take that opportunity into open a short sell positions. Okay, consolidation, drawdown. All right, retracement, another double confirmation that this is our supply. We're opening our short sell positions, and if we are wrong, because yes, this is the game we chose to play, if we are wrong and our stop loss will be gonna be triggered, despite the fact that there's some some stuff like liquidity sweeps, manipulations. So this is not about that. This is video only about supply and demand. So if your stop losses will be triggered and the price won't go to the downside in your direction that you predicted, that means I'm not going to say that you are wrong, but the market is wrong and we're shifting from the bearish into the bullish market structure. So this is not like you're being wrong. You just traded with the trend and right now trending is shifting. So right now you're shifting from being a bearish into a bullish and start hunting for the buy long opportunities. Same situation on the demand zone, on the demand example. If the price or even continuation, this like continuation, this is let's just see reversal situation when the price comes from the top. Boom, reverse to the upside, continuation, movement to the upside, consolidation, printing in, forming a nice demand zone, another continuation to the upside. So despite the fact of those two different examples, but yeah, we form it and printed this beautiful demand zone. Impulse and movement to the upside once again. Retracement, I mean pullback to the downside, opening our buy long positions at here, taking this opportunity as a window to make money, and boom, price close above it, and you traded with a trend, your stop loss has been triggered, so right now you're gonna use this opportunity. Yes, sometimes you're right, sometimes you're wrong, but I'm gonna show you and I'm gonna explain you in the different way that you won't see on any other YouTube channel. I'm telling you the truth because these things happen and you have to be prepared mentally for it, for those type of situations. So this is not that you're being wrong trading together with the trend. Trend shifted from the bullish into the bearish, and right now once again you have to start hunting for short sell opportunities. So right now what are we gonna do? We're gonna jump straight into gold charts. We're gonna take a look based on the supply and demand on the Bitcoin charts, a little bit more volatile market, and we're gonna take a look on the USD JPY Forex pair that I posted this on my Telegram group, which was absolutely free. Go check it out. It's absolutely free. Go join if you're not in my Telegram group. I posted this trading call based on the supply and demand strategy. And for you, for those who took this buy long opportunity, congratulations. For those who took it, congratulations once again. Take your profits, don't be greedy. And yeah, let's jump straight right now into a gold. So let's just take an example on gold, 4-hour time frame, the most popular time frame on the trading view, and for me it's one of my favorite time frames, 4-hour time frame, because there's a lot of juices on those bigger time frames. So right now let's just talk step by step from the left side to the right side. Let's just start talking where we can see those impulsive movements to the upside that could identify our demand zone. First of all, this is just an example. So we printed this impulsive movement to the upside. Technically, this is our demand. Of course, we didn't retest it. We retested this whole, let's just say, fair value gap for those who are using Forex terms. And some of the traders, yes, they're trading fair value gap. Some of the traders trading only based on the supply and demand. But again, this is the first thing I do. I trying to identify supply and demand. So, right, where we can identify those impulsive movements once again. All right, price went all the way to the upside rally. For example, we cannot identify anything right now if I'm gonna try to see with my naked eye. But right now, look, we printed this impulsive movement, this impulsive bullish movement. So together with this consolidation, let me just demand, together with this consolidation, we retested this demand zone and the price bounced back up. So this is your window where you can open your buy long position. Yeah, all right, stop loss has been triggered. This is just an example. All right, so you took this opportunity, you take your buy long position. All right, price rallies up to the upside. I mean, again, together with this impulsive movement, I could say that this is also our potential, let's just say, demand zone. But sometimes I'm only trying to identify what is happening at the bottom or at those truly nice juice levels when we can see clearly with our naked eye that consolidation phase. Sometimes from our swing lows, to our swing highs, I'm using a Fibonacci tool. From our swing highs to our swing lows. Well, not that accurate, but let me just take the whole chunk. Your job, once again, if you remember my previous video about Fibonacci tool, your job is to be able to identify swing lows and swing highs correctly. So I cannot see any like sharp retracements in the middle. All I'm seeing that the price is climbing towards the upside. So this is definitely my swing high and this is my swing low. And by that, by helping of this Fibonacci tool, I see that the golden zone, one of my favorite zones, has the respect. The respect was there. Those impulsive movements to the upside identify that this like our golden zone, our demand zone, and price reversal, rally to the upside. So that is pretty much it on the demand zone. We just can we can keep this back testing or going. Let's just see, we printed this impulsive movement to the upside, all right? Together with the bottom consolidation from the bottom. This is like our second, the last bearish candle. Together with those, at some point, we retested this demand zone, and this is your window where you can open your buy long position. All right, just an example. So the example on the Fibonacci's, you can always backtest it. You can always backtest and try to hunt for those nipples, for those impulsive movements to the upside or to the downside. So right, technically, yes. So demand, we already discussed on the gold. That was just an example. Let's just start talking about supply, where we can see our potential supply. I'm going to start using my brush tool. All right, so we form rally to the upside. I'm going to delete that very quickly. And instant drop. Together with this consolidation at the top, we created a supply zone. We didn't even retest that. The price went all the way to the downside, another drop. After consolidation, instant drop once again. There was no retracement at the top. The price couldn't climb back to the upside and retest to give us a double confirmation. Instant, another drop. And if you pay attention closely, we can see on even the lower time frame, we have a small consolidation as well. We have here a small consolidation. Price retested that zone. We got rejected once again. We retested the supply. We retested 3 times that this like are definitely our supply, and it keeps dropping. The same thing we see in the middle here, the supply zone. Instant drop. We didn't retest that instant drop, or maybe on even the lower time frame, if you can see and you can calculate on this with this wick to get on probably on the 30-minute time frame, but I'm going to analyze everything on the 4-hour time frame. Instant drop. Price climbs towards the upside, retest this supply zone. Boom, drop. I can even double check to use as a double confirmation from our swing highs to our swing lows. Golden zone was respected. God damn it. The golden zone works like a magnet and like a magic. Golden zone was respected. We retested the golden zone after we were able to identify swing highs and swing lows. So if you're not confident that, oh, maybe this is not our like truly like a supply zone, that accurate one, that juicy one that we're trying to retest and then push the price to the downside, and to use that opportunity to open a short sell position, use a Fibonacci tool for double confirmation. For example, maybe I'm not going to be that accurate, but from the top to the bottom, from the bottom to the top, look, rally to the upside. We retested this golden zone together with this impulsive movement, and yeah, we see that there's a lot of demand as well. Not that perfect, not that exactly demand that we're looking for, that impulsive, let's just say nipple, but yeah, it worked like a magic. Golden zone gave us a second confirmation that we need to keep our eyes on those levels. Of course, small wick to the downside, but yeah, shake off, fake outs, it is, these things happen. But this is only about the supply and the demand. So yes, once again, drawdown. We see some kind of consolidation. We didn't retest this consolidation, those previous candles, but we have some kind of, let's just say, consolidation here. And we retested, drawdown. From the bottom, at some point, we retested this fair value gap, or let's just say the whole demand zone. Yes, sometimes I'm also using and taking as an example the whole chunk of this candle and using to identify a potential demand zone, but this is on the bigger time frame, so don't mind that. And yeah, rally to the upside once again, rejected from this supply once again. Boom, drawdown. We use that Fibonacci to identify our supply zone as a double confirmation from this consolidation, drawdown. All right, we retested once again, drawdown. So what else? All right, after price climbs to the downside, I mean, I'm gonna take a look, the whole chunk, take a look. If we respected this zone, this is the zone that I'm talking about. We retested the zone, rejection, because we see those supply candles, and together with this small consolidation, I mean, not that accurate one, not that perfect one, but don't expect that every single time the consolidation phase would be that perfect. Where's my supply? Rejection. Whatever, I just double check my thoughts that I'm seeing. All right, talking about the demand. Drawdown, drawdown. Right now a small consolidation, and boom, this movement to the upside. Together with this movement to the upside, we identify, or even the lower time frames, what I want to see and what I want to tell you guys, that we broke the structure and shifting from the bearish into the bullish. And we retested this beautiful demand zone even twice. Even twice, rally to the upside, break of structure, rally to the upside, retested, of course, a volatile market, don't mind that. And price climbs towards the upside. So that is pretty much it on gold. Let's jump straight and take a look what is going on with the Bitcoin. Okay, 4-hour time frame on the Bitcoin, same as on gold, but yeah, Bitcoin right now is dropping, and while the market is dropping, crypto market, and it's really boring right now, so we have time to educate ourselves. And yeah, so let's just dive in on the Bitcoin charts. All right, so the Bitcoin, after printing this impulsive movement to the upside, of course not that perfect. I'm not gonna do educational guess, and I'm not gonna do the prediction where could Bitcoin go in the upcoming days right now. This is just only based on the supply and demand, only everything about the supply and demand strategy. So right, the massive drawdown, let me just zoom in. All right, consolidation, and after printing this impulsive movement to the upside, we changed the whole character. We're shifting from being, let's just see, not technically, but yeah, after seeing this big bullish candle, we destroyed this one because it is better and it's bigger, and this consolidation is our potential demand. So what just happened? And for those who are taking those quick buy long positions, we retested this demand zone, and there was your window to open a buy long position. But we have a lot of right now a supply because we are right now in the downtrend. So where's my brush tool? We are in the downtrend by forming, let's just say, lower highs, and lower highs. So let's just take a look once again. All right, we had a lot of demand here after printing all of those bullish candles together with this one, and printing this impulsive movement together with this consolidation and this massive wick. Of course, this like our support, I would say that, but this, in my eyes, this is our demand. We retested, rally to the upside. All right. Let's just talk about supply. Right now, I cannot see anything clearly to show you a perfect example that we discussed on that illustration, from the swing highs or swing lows. All right. Boom, drawdown, a consolidation, another drop. We see some kind of consolidation. We see that there's a lot of touch points here. We didn't retest that one. But, for example, on some volatile markets, I cannot actually predict stuff. I cannot see anything. This is where comes my Fibonacci tool. So from our swing highs, sort of swing lows, once again, not that perfect, actually, not that perfect, but the golden zone was respected, and I can identify that supply zone was valid, and I should take that short sell position after retesting this beautiful supply zone. Here, nice massive drawdown, this consolidation together with that, let's just say, together with that wick, that last bearish candle, we retested, boom, price respected those zones, even actually twice, and drawdown. Demand zone, this is where I can see clearly right now. This is what I prepare for you. So yeah, after printing this impulsive movement to the upside together with this one and this previous bearish candle, look, perfectly connected together with that wick. You can take it together with that wick. We retested this demand zone, rally to the upside. Of course, crypto market is a little bit more volatile. So right now, and when the crypto, I mean specifically Bitcoin, is trying to reach new all-time highs, and yeah, so we can be not that accurate. But look at this one, nice bearish candle. At the top, we see the consolidation together with that wick, together with that bearish, let's just say wick or fake out shake off. We retested this supply zone, and then even twice, and another drawdown. So let's just take a look and try to hunt for, let's just say, another demand zone, because yeah, we're bullish and we need to, oh, here it is. Nice nipple, nice instant pump together with those previous consolidations. I'm just trying to explain to you in the most easiest way and the simplest way that is possible. A retest, volatile market on a 4-hour time frame, retest, rally to the upside. Boom. Here, where's my brush tool? Impulse movement together with this whole consolidation, retested, not that perfect, rally to the upside, together with this impulsive movement, together with this candle, demand, retested, rally. Together with this, before this impulsive movement, we have some candles at the bottom. Let me just quickly delete that. Together with this consolidation, don't mind those big wicks, because sometimes, yeah, I mean here, because the crypto market is a little bit different than volatile, so you cannot be that accurate. So you have to anticipate that there will be those type of wicks like we see here or here. So yeah, impulsive candle, this one, bullish one, demand zone, retracement, retest, rally to the upside, another retest, for example. But yeah, you're probably gonna take this by a long position than this one. So yeah, that is pretty much it on the Bitcoin. And let's jump on USD JPY, because this is always a little bit tricky, a little bit more tricky, and there's going to be a lot of laser show because of the trend lines. But yeah, let's just take a look. So before I'm gonna explain you guys, so I posted this, that we have a perfect demand zone at the bottom, and I posted after printing this bullish candle of a little bit more fundamental analysis, because we see that massive drawdown. So I'm anticipating, of course, this like a daily demand. I'm anticipated that it has to be time where the price starts to reverse and start shifting from the bearish into the bullish market structure. And we started to print those bullish candles at the bottom. So I identified that this like definitely are some kind of support. Let's just see double bottom pattern. And after printing those impulsive movements to the upside, I can identify that this is definitely my demand zone. Where is my... Here it is. Just an example. Together with this, let's just see, consolidation, or even if I'm not sure, where's my previous Fibonacci? Let me just delete that. My previous Fibonacci tool from, let's just see those. That is perfectly identifies between, let's just say, premium zone and the golden zone. Sometimes I'm looking in between, because market structure comes first. Remember that market structure comes first, indicators come second. This is my trading strategy. So yeah, impulsive movement, I'm taking this whole chunk as a demand. Perfect. Let's just take the more traditional way, or maybe not that perfect, but from the swing highs to our swing highs, from our swing lows to our swing highs, golden zone was respected. So together with those wicks, from the lows to the tops, if I'm not sure where's my potential, let's just say, demand zone is, the golden zone was respected and rally to the upside. So I posted this absolutely for free. So what is like 89 pips. So for those who took this trade, congratulations. Even on the 1 hour time frame, I do understand that you like to trade on the 5 or 15 minute time frame. So this is not what I do. I'm taking those a little bit bigger swings. So yeah, perfect demand zone was identified. This bullish candle, it is like, if I'm taking this whole chunk trying to analyze what just happened, and this one was the most bullish, let's just see, nipple. I'm gonna call it like a nipple. Right now, of course, I'm not gonna do this I'm not gonna predict what could happen in the future, and I don't want to be like a financial advisor right now, because we don't know where tomorrow could bring us. But after printing those two bullish candles, and we are Trend line trading strategy is going to be in another video because I'm step by step, I'm recording all of my trading strategy. So after printing this impulsive movement to the upside and after breaking this trend line, I could identify that there's a strong probability for us to start retesting this massive supply zone on, even if I remember correctly, on a 4-hour time frame. So if there's going to be some news, I'm definitely going to post on my Telegram. So if you're not on my Telegram channel, that is absolutely free, absolutely freaking free. Go check it out, go join it. If I'm seeing something cool and something, I don't know, important, I'm always posting. It is, I don't know, announcing my videos, announcing my trading setups, etc., my trades, results, and whatever. So right now, the price is climbing towards the upside. We printed this demand zone, support, and right now climbing towards the upside. So I'm not recommending you to take a trade from here. This is your choice, but we're breaking the whole structure once again, shifting from the bearish into the bullish. And for those, congratulations for those who took the trade from here. And that is pretty much it. That is pretty much it based on the whole concept and how I trade supply and demand. Remember, this is what I do first when I jump into the market. Supply and demand, and sometimes those important key levels. If we're talking about the crypto, for example, Ethereum 3.5K, $4,000, those round psychological numbers. Those are the things that I'm looking at first. Supply, demand, supply, demand. In the next video, we're gonna talk about adding a little bit more juiciness in our charts. So I'm gonna see you in the next one. We're gonna talk about why I'm trusting my trendline trading strategy. So that is pretty much it. And I'm gonna see you in the next one. Peace out.